Hey, welcome to the show. Today I have a special guest, Jake Claver. Very excited to have him here to talk to us about wealth management, XRP, and some visionary ideas about what we can do with our wealth kind of in the future once many of our assets have come to have their true value and not the suppressed value we're seeing in the current situation. So welcome, Jake. Nice to see you today.
Yes, ma'am. Thank you for having me. I appreciate you having me on to discuss
And
this.
for anyone watching, cool. And for anyone watching who doesn't know you, can you just give us a little bit about your story, how you got to this place, knowing about money and XRP and all that type of thing?
Yes, ma'am. So, went to school for finance at the University of North Texas. I graduated 15, that's rather actually when I took a position in industrial sales, scaled multiple locations for a Fortune 500 company. Was acquired by another company to come do the same for them. Did really well there. 2020, COVID happened, and I had some money put to the side. Anyway, ended up getting into the market. After I made some good money there, looked to de-risk, got into digital assets, and then I've spent the last 3 years preparing for a pretty significant liquidity event, like we all kind of have, and in doing so, put myself around some really good professionals in different regards that are proficient with digital assets, CPAs, accountants, wealth managers, financial advisors, funds and foundations. And when I started speaking about some of those things on Spaces on Twitter in the middle of last year, I found out that other people were not doing that and decided to go ahead and formalize a family office service provider. So we have a digital family office. We've currently got 5 clients that have had digital asset liquidity events. And so we specialize in somebody that's had, an event that's caused them to accumulate $10 million or more in net worth. And we help them diversify that and protect that wealth so that they'll continue to have it in the future.
What does that mean, a family office versus another type of entity, for people not familiar?
Right. So a family office is a consortium of professionals that work specifically for you. If you have a single family office, there's a few models. So you can have most of the time, to have a single family office, you're looking at 100 million or more in net worth is really when it becomes feasible. Below that, you're going to have a multifamily office. So that's something that we're going to transition to in the future, where we have professionals in-house and we provide those services that cater to people with digital assets. And that's going to be somewhere between $1 million or 20 million and 50 million is when that starts to make sense for people. And then you can run a very lean family office, which is you keep professionals on retainer. They help you set up LLCs or manage certain things within your portfolio, manage your estate, those types of things, so that you can make sure that you limit your liability and you're mitigating your tax obligations. And a virtual family office or a digital family office, which is what we provide, makes sense around the $5 to $10 million mark.
Now, one thing that's a reality of our current situation is inflation. And so all these numbers that you're throwing around dollars, like, how are you going to deal with that if the dollar continues to lose value at an accelerated rate?
So kind of two things there. I agree that we're going to continue to see that unless things are shored up. I have reason to believe that we'll transition to a CBDC or other wholesale CBDCs that kind of shore up the financial system, which I'm sure you guys have discussed before, and they'll kind of phase out the dollar that we currently utilize. And then the other side of that, people that have that much wealth are not as affected by inflation, right? So people that have millions of dollars, if you're generating a normal return or at least keeping up with inflation on your assets, then it's not the inflation that's happened really hasn't affected the people that I'm dealing with, I guess.
Is that because their assets are also appreciating in value with inflation?
Correct.
Okay.
Right. So if you own assets, inflation's good. You're right. So
Yeah, that's true. If you have a lot of debt too, inflation is good.
Correct. Yeah, it's cheaper to pay it back.
Mm-hmm. So I think a lot of people watching the show may not be in a situation where they have the wealth associated with family office. So I'd like to talk to you about an idea that's sort of more maybe relevant to a greater group
Mm-hmm.
of people. And so let's just hypothetically say we see this liquidity event, which in layman's terms means our assets become worth substantially more than they are today. And now people have to make some decisions about like what do I do? Like how do I can I be my own bank? That's what I want to talk about. This idea that gets tossed around. Uh, it's been used, I think, in a lot of different capacities within the crypto space. Some just sort of thought it literally this sort of DeFi thing where I'm going to take my assets and put them in liquidity pools to make some kind of yield. What I'm talking about here with you is a little bit more grand and like literally creating your own like bank entity. Have you thought about this topic at all?
I definitely have, and so
Okay.
I'll discuss infinite banking, and then we can get into like
Okay.
actually formalizing a bank. So, infinite banking is a concept that I utilize with business owners that I work with. My day job, outside of the managing the family office, is I work with business owners to increase their multiple prior to exit, and we focus on liquidity strategies for them. And so,
Okay.
one of the ways that we do that is we will fund a whole life policy. And depending on how that's done, you can get other fiduciaries to issue lines of credit against that whole life insurance policy. So you get a $500,000 policy, you'll pre-fund 100,000 of it within your business, and that does three things. So um, you get the tax write-off for the full 100,000, which is nice. You get the
Okay.
life insurance policy for your loved ones if you were to pass away. And then finally,
Okay.
you can issue that line of credit, and you get that at like a 2 or 3% interest rate, which is far lower than an SBA loan or any other types of business credit that you would normally be able to get. So now you have a $100,000
Okay.
line of credit that you can run up and down and pay off at your leisure. There's no structured payments. And as long as you're using those funds to generate a higher return than the interest rate on the loan, then it's free money, right? Upon your death, the life insurance policy pays that line of credit off for you. So
Oh.
you don't ever have to repay it
Oh.
if you didn't
Okay.
want to. And so that's
Interesting.
similar to what we'll be looking at with these digital assets. And people do already do this with their 401k or their IRA. They'll work with these fiduciaries to get lines of credit against them at a very low interest rate. And as long as these stocks continue to appreciate over time, it takes less and less of those stocks to pay off the original loan, as long as the upside or the ROI on the stock outpaces the interest rate that you've got, right? So let's say you got an interest rate at 2% against your stock portfolio, and as long as your stocks continue to appreciate at 10% a year, over time, it's going to take less and less of that collateral when you pass away to pay off your debt. And we see this done by almost everybody that's a billionaire. Elon Musk bought Twitter, right? He paid $44 billion. Well, he didn't have $44 billion liquid. He got a loan against his SpaceX stock or his Tesla stock from other fiduciaries in order to buy Twitter. And it's at a low interest rate. So as long as the collateral that he originally used to get that loan doesn't go away, if he were to pass away, they would collect that collateral and move it over there and it'd be on their book to pay off his debts. And so we'll just say XRP, right? You take that, you collateralize it somewhere, you could take loans against it. And as long as it continued to appreciate in value over time, it would take less and less of that asset later on to pay that debt back. And this was actually a question that Lewis Jackson asked me on his podcast. And he said, is there a ratio that you would stake versus take loans against? And I said, it depends on the price of the asset and what I thought it would go to long term. But if we saw, like 50 or $100 in the short term and we were offered this ability, I would take out as much loans against it as I possibly could, because now it's going to be the cheapest, and over time it's going to continue to appreciate in value. So it would take less and less and less of that to pay the back. And as long as it
Okay.
was at a low interest rate, I have the resources that I could take that capital and put it to work somewhere else that would generate a higher return. So,
Now I can see this strategy working if you are using those funds to invest in some kind of asset that would create additional value. How would this work for someone who needs like money to live on? Like where does those funds come from?
you could still do that. So you could use this money to fund your lifestyle, and that's what a lot of billionaires like Mark Zuckerberg do. You see them buy
Okay.
these super yachts and other assets at their house or their cars. It's loans against their equity in their companies that they use to do that. So you could definitely fund your lifestyle with it. And again, upon your passing, the collateral that you used originally to get the loan would pay it off. So you never technically have to pay it back. And then whatever was additional after that loan was paid back would go to your loved ones or whoever was, listed in your will or trust.
And then do you need to set up like a company or a trust? Like what are the logistics on doing this for like a person who's not a family office type wealth
Yeah.
status?
So I would, if you're going to have a liquidity event of any kind, a lot of people have asked me, at what point would you look at setting up a holding company or a trust? If your net worth is above $500,000, it would behoove you to have some type of trust set up. There's many different types of trusts. When my father passed away 2 years ago, he thought he had a trust set up and did not. And luckily, my brother and I are pretty amicable, and we didn't have to go through probate for a lot of his assets. But especially if there's a lot of beneficiaries, and the other piece is if you did have to go through probate, all of that becomes public knowledge. Anybody can see who got what upon your passing. So if you have those assets inside of a trust, they go to who you want them to, and two, there's no public record of who got what. So I would definitely advise people, I'll just put the disclaimer in here. None of this is financial advice. Always consult your financial advisor before making any investment decisions. All this information is just for entertainment and educational purposes only.
Noted.
So, yeah, at that point, beyond $500,000, it probably makes a lot of sense to go ahead and set up a trust. And you may have LLCs and holding companies and other structures underneath that, depending on what you're doing with your money. But if you're just going to live out your days and enjoy your lifestyle off of the loan against your assets, then you may not need all that. You may just want a trust set up. I met with a nice lady the other day. She's a bit later on in life and has a pretty good amount of digital assets. And so, but she doesn't have any children. And she wanted to leave a lot of it to charity. So in that sense, you could set up a charity trust or a charitable remainder trust, where a portion of whatever was generated off your assets was donated while you were alive to the 501c that's designated, and then upon your passing, the rest of whatever was left goes to that charity. And there's a lot of tax benefits that are associated with that.
So I'm just going to try to paraphrase this for people who are new to this thing, and just correct me if I'm getting it wrong. So let's say I have an asset that's worth $1 today. And I've got a bunch of them. I've got 1 million of these assets. So I have $1 million worth of $1 assets. And I go out and I take out a loan for like $500,000. One option is I could have sold half of my assets, right, and had cash, but then I only have $500,000 of these dollar assets. So the strategy you're recommending is keep the million of the dollar assets, take out this loan, and then let my asset go from $1 to, let's say, $20. And so I'm now going to benefit not from the price appreciation, which I couldn't do if I sold now to get the cash. So is that correct?
Yes, ma'am. You're 100% on point. Okay. And the other piece of that is you don't have any tax obligation on loans. If you were to sell those assets, you would have capital gains tax that you would then have to pay as well. So you basically don't have to pay any taxes and you get all the benefit.
So why wouldn't you do this?
Your guess is as good as mine. You have to find
lack of knowledge, or just
you have to have a fiduciary that's willing to loan against the collateral. So in the past for crypto, Nexo was a platform here in the US that would do that against your Bitcoin or your XRP. And because of the volatility with these assets, they would only loan up to a certain amount. And if the value of the asset were to drop below what they loaned, they liquidated your position and took your assets. So that was the potential risk up to this point. But as the space continues to progress, I think that it'll be similar to your stock portfolio. And from my understanding and experience, they don't repossess, even if the value of your assets drop below a certain threshold. They know that they're going to go back up, so that they won't collect on a loan.
I can see that being the high risk, that you end up now with no assets and no cash.
Right.
If the value went down a ton.
Yeah. Okay. Which I think, I won't mention his name, but there was a prominent YouTuber that mentioned that he took out loans with Nexo on his XRP and then repurposed that capital into real estate. And so, and it did get, the price did go lower than what he was hoping for. So I think he did get liquidated and may have lost some of his digital assets when that happened. But he did, at least use the capital to buy other assets with it. So, and I do want to touch on that real quick. So you had mentioned, what about people if they just want to live on this? The way that I'll be structuring this is I will take loans against my digital assets, which I will then buy other assets with that produce cash flow, and then live off of the cash flow from the assets that I purchased. So,
would the asset be a different kind of asset? Or are you saying like you buy like an apartment building that had rent coming in?
Correct. Yeah. So I like to pay my bills or my liabilities for lifestyle with assets. So say you wanted a Ferrari. Okay. Instead of taking the $500,000 and buying the Lambo, I would go buy a car wash that generates $250,000 a year. I'd save up for 6 months off of the payments from the car wash, put that down on the Lambo, and then let the car wash pay the monthly payment on my Lambo every month. And then when I decided I didn't want it anymore, I just sell my Lambo and buy another vehicle or trade it in, and then continue to have that paying the payments on my vehicle. So it's not coming out of my pocket every month.
Understood.
Same thing with your house. Maybe you buy a smaller multifamily property that generates $300,000 a year or something, and you finance it and you live off the difference, and whatever the difference is pays for your house payment every month. That way, again, I'm not having to take my personal loan or my money that I leveraged against my assets to pay for it. I've got another asset that I own that continues to appreciate in value, that's spitting off cash flow that pays for my liabilities.
Awesome strategy. All right, let's talk about Polysign. So a lot of people who watch my channel are heavily invested in XRP, and we've been watching Polysign for a long time. There's always been this kind of secrecy around, what are they really doing? Who are they serving? And you, amazingly, have had conversations with Polysign. So what have you learned about Polysign as a company, and then how it potentially could help people like us who are retail investors kind of manage our own money?
Well, so because of my position with the family office and some of the other things that we're doing with the mastermind, we're putting together a fund for XDC to launch a master node on the network. We already have the nodes running. They just need to be funded with the XDC, which is 10 million XDC. And so traditionally you would have to raise the money in fiat and then convert it to crypto and then fund the wallet. But because Polysign purchased MG Stover recently, they will actually do the fund management and accounting for in-kind assets when it comes to crypto. So they will allow you to, register your wallet address. People send their XDC or whatever other currency to your wallet address. You do whatever you're going to do with the cryptocurrency that generates returns, and then they'll also automate the distributions back to their wallet addresses, and all of its KYC and AML compliant. So reached out to them for that. And then also on the Polysign side, or the standard custody side, obviously people that work with me that have a significant amount of digital assets are going to want a custodian for those that's safe. And so they walked me through all of the software that they have available for the custody side. But to answer your question directly about retail, they do not work with retail investors. Only accredited investors
Okay.
can utilize their platform, and it really only starts to make sense to utilize their services when you have more than $2.5 million worth of assets because of the fee that they charge. So
Do they have a flat fee or is it like a percentage?
there's a minimum, so it's $5,500 a year as a minimum for them to custody your assets,
Okay.
and if it's if you have a higher amount than the 2.5 million, then it's 22 basis points. So 100 basis points would be 1%. 22 basis points is almost 0.25%. So, and if the fiduciary or the person that you're partnered with that's leveraging their platform is also partnered with MG Stover, then they will do it for 11 basis points. So that's kind of where we're at. We would prefer to be that way. MG Stover does have a fee associated with their service on the front end that's annualized. That's it's $60,000 a year to work with them if you are a fund manager. So,
Okay.
but yeah, retail, they're not going to have the availability to work with them unless they're working with a fiduciary or a wealth manager that leverages Polysign services.
I guess I consider accredited investors who aren't part of like an institution to be retail, but maybe that's not a correct label.
Well, so an accredited investor, the qualifications here in the U.S. are that you make $200,000 a year if you're single, $300,000 a year if you're married for the past 2 years, or you have $1 million net worth outside of your primary residence. No.
Okay.
Yeah.
And so let's say you are a accredited investor. You're not, you don't own your own hedge fund or family office. Let's just say you have $5 million in net worth and you have a bunch of digital assets. Let's say your XRP now becomes worth $10 million, whatever, hypothetically. You could custody that with the Polysign sort of family standard custody. And then what would, we had this idea that I don't know if it's true, that we could sort of have Polysign help rent our XRP out for some kind of return as it's used in exchanges. Is that an accurate option?
So they do not provide any investment solutions. They are only the custodian, the fund management piece with MG Stover, and then they also have AtomicNet as their third subsidiary underneath the Polysign umbrella, and that's for the settlement of transactions for digital assets or tokenized assets. They will partner with other fiduciaries that would do this traditionally. So when I set up infinite banking, I will have to go to Goldman Sachs or Fidelity or Merrill Lynch, and I have that policy, and I'll say, hey, here's this asset. Will you give me a line of credit against it? And then they will issue the line of credit. So it will be very similar to that with Polysign. Polysign will custody the assets. It'll be insured. They provide the security third party that's trusted between everybody. And then they'll partner with the fiduciaries like the Goldman Sachs, the Fidelities, the Merrill Lynches, all these other investment banks would then offer those lines of credit against whatever the assets that they're holding. And then as far as renting it out or leasing your XRP, they're working on a solution to be able to do that. They already offer staking with Solana on their platform. And they're working, and I think they already have this, for Ethereum. They have a way to custody your Ethereum there with them, but because it's proof of stake, it has to be delegated, right, in order for you to earn or generate the return on it. And so they have a way of being the owner of your asset, but also delegating it as well so that you can earn those returns. But that's not something that they currently offer on their platform. I think it is coming though. So
because XRP is not proof of stake, so I always find it strange when people talk about staking XRP.
Yeah, it's not the same thing. You would be leasing or renting your XRP, like you stated, to somebody that was a liquidity provider. And I think as Hooks comes online, and then we also get XLS 30D when both of those amendments to the XRPL are voted on. I think there may be some other solutions that are provided that don't currently exist now.
Okay. So it sounds like we could kind of rent it, but we're not really sure how that will play out.
Right. Yeah. I don't have any definitive answers on that, but I suspect that that will be an option based on um, when I asked them specifically about this and the collateralized loans, they said, we will not be offering those services, but we will be partnering with
Okay.
other people to do so.
Got it. Okay. All right, I want to look ahead a little bit to this world that I happen to believe is coming, which is a transition from our sort of fiat debt based money, where money is created when loans are issued, to one where money is now tied to assets, gold being one of them, but a variety of different ones. So are we in agreement that we're moving to an asset backed world? Okay. I am kind of curious though, because one big question comes up in this new world of asset-backed currencies. How do you see debt working? Like, will people still take out loans? Like, how would a bank issue a loan if they actually have to have all the assets?
So
Have you thought about this at all?
I have, and people won't like my answer on this. Um,
Okay.
I think we're still going to have some type of fiat currency that the majority of the general population deals with, and the back end financial system will be shored up by asset backed wholesale CBDCs. The front end
Okay.
CBDC, I don't believe will have, it may have fractional backing, okay? And you need credit in order to pull cash from the future into the now and continue to expand the economy at the rate that we have over the last century. Um,
Okay.
and if you did not have that, then it would be very difficult to continue to expand things at this same rate, especially with technology advancing the way it is. So, again, I'm of the belief that we'll have wholesale CBDCs that are asset backed, like you just mentioned. Could be gold, could be oil, could be other commodities, could be a full basket that each country, has and can prove that's auditable. And then the retail CBDCs that the general population uses will still be, it'll be fractionally backed somehow, but it won't be completely shored up like a lot of people are hoping for.
So you don't think that the solution to this inflation problem will come from taking away the power to just print money at will?
I do not. So technology is inherently deflationary. As processes become more
Okay.
efficient, technology has been deflationary to the tune of about 7% a year over the last 2 decades. And that's why we've seen the Fed inflate at around a 9 or 10% rate to keep that 2% inflation that's their mandate. And we've seen them exponentially run that up over the past couple of years. So if you knew that a significant deflationary effect as technology went parabolic, you had the convergence of AI, blockchain, smart contracts, 3D printing, all these things that would smash the costs associated with the production of goods were going to come into use, then you would probably front run things a little bit like they have. Um,
Okay.
and I think that the deflationary effect of technology as it moves exponentially will allow them to continue to print money in opposition to that to hold price stability. Um, so if you had a CBDC, and this is going to sound dystopian, and I've had a lot of people, not like this. So just a thought
Okay.
experiment, okay? Um, Most people don't like, communism or socialism. I'm not a fan either. I prefer free markets and capitalism as well. But I think you
Okay.
could have UBI if you had CBDCs and all of the data for the transactions within an economy was aggregated and analyzed by an AI. It could then distribute funds accordingly to wherever the arbitrage or disparities were in their economy. And that's the reason that the Soviet Union collapsed, is because in a free market, people will find those opportunities and exploit them until it reverts to the mean. Whereas within a socialistic society, they can't allocate capital appropriately. So
Okay.
if you had an AI that could analyze all of that data and allocate the capital appropriately, then you could direct spending within an economy to shore up those issues. And you could also have, a standard of living for people. And if you had the deflationary effect of technology at a pretty significant rate, you could print money against that with an inflationary mechanism and allocate those funds across an economy and help people. So,
And I agree with you that UBI, when it has this label of sort of big brother giving you money and controlling what you're allowed to spend on, has a dystopian feel. But you could also use the label that those are royalty payments for being a member of a country and
yeah,
getting paid out.
Andrew Yang labeled it as a freedom dividend. And if
Okay.
if you look, so I won't get into Nasara, Jasara, or the Great Reset. Those have kind of been labeled as oppositions. But if you look at the themes between both of them, they are actually the same thing. It's just how it's presented to people. And UBI is listed on both those. So it's just how it's used. And I think that, as countries introduce these CBDCs, they'll be introduced in ways that are normalized or toward their social norms. So China's a communist company or country, and they've introduced it in a totalitarian way, whereas the U.S. I think will be more lenient and not as aggressive at taking people's data or implementing social credit scores. I think that it'll be used, in a progressive way so that people don't trade their food stamps for drugs. Whatever the social goods or the social programs that we issue are supposed to be used for, that's what they'll be used for. And people that are, and I also think that there'll be private currencies that are issued by banks or other people that are shored up by assets, right? So if you wanted to, and again, it'll be fractional for the public, but the CBDC that's issued by the Fed may have been programmed to be directed in a certain way, and if you receive that freedom dividend, then you do have to spend it a certain way. But if you're working for somebody else and they pay you in a different stable coin, then you can use that however you choose. So,
Do you think giving this Fed or government the authority to decide what you can spend it on, do you think that's a slippery slope and that could be used as a political tool to squash dissent?
oh yeah, definitely. You'll definitely have to have.
How do you make sure that the bad guys don't sort of use it for their own advantage?
I think the way that we vote and government structure will have to change so that we're represented in a way that doesn't allow for things to be manipulated the way that they have been, and I'm hopeful that
Okay.
happens. I think a DAO as a government structure could be a fantastic tool and keep a lot of the issues that have existed up to this point from happening again. If you had code that everybody trusted and certain things were supposed to happen a certain way and they couldn't be changed, then the Bill of Rights or the Constitution would still be upheld. But things have been manipulated since then, and the bills have been passed, so we are where we are. But yeah, I agree with you. It's definitely a slippery slope, and you need people in place that can kind of mitigate those risks and make sure that doesn't happen, and continue to help the average person in a country not end up. We don't want to end up being like China or these other countries, or North Korea, and I don't think we will. I think, again, the cultural norms will kind of dictate how a CBDC is used.
And I'm optimistic to hear you say with confidence that we will have multiple currencies being utilized within the market. Because to me, that's where the real danger comes. If you're not allowed to use anything but the CBDC, and you have to get paid in CBDC, and you have to pay your taxes and whatever, buy groceries in CBDC, and all of a sudden some kind of control mechanism comes in that is not favorable to us, you're kind of screwed because you don't have any other option. But if we truly have choice, and I can just say, you know what, I'm not going to deal with you CBDC because I'm going to deal with this other currency because I have more autonomy, that to me would keep the CBDC dystopian scenario in check because there would be some competition there.
Well, Jerome Powell has said that there would be private stablecoins in a meeting.
Okay.
So that's what makes me believe that there will be choices for people when it comes to this stuff.
And I think that if the CBDC were formed as this royalty payment or a dividend type structure where you're kind of receiving a return on a system you've paid into your whole life, like the sort of Social Security idea, then I don't have a problem with that. I guess I get worried that it can be manipulated and used as a political tool, which we've seen the last couple of years, unfortunately.
Yeah, I agree with you. There are definite risks that are involved with it, but I'm hopeful that those will be mitigated by some of the things that we see, the changing of the guard that's going to happen in the political scene. When Trump was in office, they filed a patent for blockchain voting through the post office, and I think we'll probably see that with the next election, just because of all the voting fraud and other things that have been uncovered and the manipulation that's gone on there. That people are becoming aware of, right? I think it's been going on for a long time. It's just been kind of drug up to the surface now. And so my only fear with that is that IBM and Google and a lot of these other larger companies already have quantum computers. And with a quantum computer, you can still manipulate blockchain. So maybe they can still manipulate it, but it'll be pitched to the public in a way that seems like, we've got a solution for you guys and you can vote right from your phone and it's authenticated by a biometric and there's no double voting, all the things. We'll see.
So do you think to have blockchain voting, we'd have to all kind of adopt a digital ID type structure?
I do. And I'm fine with that. And I'll tell you why. So I work with another individual that aggregates medical data. And the medical data that he aggregates does not have any individuals' names or anything attached to it. It's just the data across the broad economy. All Americans, your medical data is captured. But it's not individual, because otherwise it wouldn't be HIPAA compliant. So he sells that data to actuaries and pharmaceutical companies and all the other stuff through his company. He's just one of the board directors there, the gentleman that I deal with. And I think it'll be similar for the transactions with the CBDC. They'll aggregate all of that data, but it's not going to be specific to you. There's not going to be a way for them to, or I'm hopeful that there's not a way for them to, share your specific transactions with people.
Got it. All right. Well, I guess we'll kind of have to see how some of this stuff plays out. So what are you most optimistic about kind of moving forward? What do you see happening kind of in a good capacity for the rest of this year? Anything?
I'm hopeful that we get settlement on the Ripple and SEC case, or at least forward guidance summary judgment from Judge Torres. She's still got another 60 days before she has to do that. I was hopeful that would come out before the 31st, but obviously we didn't see anything.
Right.
I'm hopeful that Ripple wins the case against the SEC on the guise of what is it where they come? Fair notice defense. And if that were to be the case, then all of these other companies could use that same defense against the SEC. And I think it would foster a lot of innovation within the space and help things out. But if they were to win under some of the other things within the lawsuit, then it might stifle innovation here in the U.S., which I think is kind of a narrative that we're behind. I really don't think that that's the truth. I think that's on purpose. And I think the rest of this year is going to be really good for the cryptocurrency space. I think we'll get clarity, maybe global clarity around what digital assets are, if they're commodities or currencies or financial instruments like they are been issued in the UK. I think we probably end up with them as financial instruments. That makes the most sense to me. And maybe there'll be a new regulatory body that comes out that's specifically over digital assets. And then we've got, I think it's going to be later this year, early 2024 for the next Bitcoin halving. And then the cycle will repeat again, right? If we continue to see what's gone on in the past proliferate forward. I don't think that that's going to be the case. I think we're going to actually start to see some utility for these assets during this year. And one of the things that makes me bullish on that is Ripple put out a statement toward the end of last year that they stated 50% of the world would be utilizing CBDCs by 2024. And so we're through the first quarter of 2023 now. For 50% of the globe to be using CBDCs by 2024, I would think things would have to move pretty quickly from here to get that level of adoption. And we've got Fed now that's supposed to go live in June. Swift migrated to ISO last month, which people get confused between, the messaging system and the settlement layer. Although they are connected, they're not. They are two independent systems. And so I think a lot of people were hopeful that we would see price appreciation when that happened, and then kind of got let down. But it's coming. I think we're going to see some pretty significant price appreciation this year for a lot of the assets that you and I both like.
It's awesome. So if someone wanted to kind of follow you or learn about Beyond Broke, what's the best step for them to take?
Yeah, so pretty active on Twitter. Do Twitter Spaces every Saturday morning if you want to come on there and kind of listen in. Most of the time talk about wealth management, estate planning, tax mitigation, those type of topics for digital assets. You can check out digitalfamilyoffice.io if you want to book an appointment with me. Or you can go to mastermind.beyondbroke.com if you want to check out the mastermind and what we're doing there with private investments and financial education.
Amazing. Your wealth of knowledge, especially when it comes to this idea of using your money to sort of work for you, which I know is appealing to many of us.
Yeah, I'm excited for it. I think there's going to be a lot of opportunities for people that are invested in digital assets at this point, especially if they're the right ones. I would just, encourage people to have a plan. Make sure that you have surrounded yourself with some professionals before the liquidity event happens. Because if you wait till after, there's going to be a lot of, people with their hand out that may not have your best interest at heart. So just be proactive, have a plan, and execute on it.
I agree. Also, when it's happened, there's going to be this sort of panic and feeling of needing to rush, where now you have time to kind of make a thoughtful plan that, there isn't this pressure to deal with it immediately.
And I do want to mention, I don't know if you're affiliated with Caleb and Brown or not. There is a weekly limit for you to remove your assets from Uphold. I believe it's $75,000. So if you did liquidate, a pretty significant portion, if we saw some price appreciation, obviously, you're going to have the tax implications there. But if you're only allowed to move $75,000 a week off their platform to your bank account and you liquidated $1 million, you're looking at like 12 to 14 weeks to get all your money. If you use a broker like Caleb and Brown, then you can get that money very quickly. They will wire the full amount to your bank account that you designated with them. So if you...
So do they buy the XRP or something on your behalf?
So they are a broker. They source liquidity from all the different exchanges and also private individuals. So you have a broker that you can call and have a conversation with there, which is nice for me. And you'll send your XRP to their platform. They trade it for whatever you want on the other side. They'll source that liquidity for you. Their fee is a bit higher. It's 3.5%. And on larger amounts, they may be willing to work with you. But that's something that I've encouraged people to do, or just look at if you are planning on liquidating a larger amount in the short term. If we saw price appreciation, just because of the latency that exists on exchanges for removing your funds, if you wanted to move on a property or do something with that money in the short term, it's 12 or 14 weeks, a whole quarter before you get your money back is kind of rough.
Could you still take out a loan on those assets if they're still in this transition period, or is that not an option?
I don't know of anybody currently that will issue collateralized loans against digital assets for the full amount, or even really here in the U.S. now that Nexo has removed themselves from here. I'm hopeful that, as we get clarity around this asset class, that traditional fiduciaries will start to do that. But I expect that to be closer to the end of this year. if that does happen, I don't think it'll be in the short term.
Okay. All right. Thank you so much, Jake. This was an amazing conversation. I learned a ton. I'm really excited now about this be your own bank thing. You filled in a couple of gaps that I didn't get, namely that you didn't have to pay the money back,
Yeah.
to be totally honest. That's a big part of it,
Right.
right? So thank you so much. And I really appreciate you taking the time to chat with me.
Yes, ma'am. Thank you for having me.